Well, we've got Chinese stocks blowing up at the moment. Individual equity names in China trading like meme stocks in their own right. Alibaba up 40% or so. We've got the Federal Reserve fighting a credibility issue, and they're trying to get ahead of the curve, risking the US going into recession. And we've got the trade-off going international thanks to you guys. We talk about all these factors and more as we go inside the markets and assess the trade-off. Well, hi there, my name's Chris West, I'm head of research here at Pepperstone. In a second, I'm going to be joined by Blake Morrow from Forex Analytics, and we're going to be unpacking and navigating all the factors that are going into price action in the crazy world of financial markets. We're going to look at all the setups and the thematics that are really being dominated the headlines at the moment. But without further ado, let's bring Blake into the program. Blake, how are you doing, me old mucker?
Hey, I'm doing great, Chris. How are you?
Good, mate, good. Like, I talked about the trade-off going international. I'm not sure if you saw this earlier in the week, but yeah, it's some pretty cool stuff. Yeah, the Nasdaq picked up the show and has run with it in Times Square of all places in New York. There's a little known city out on the East Coast there, mate. So I just thought this was pretty cool, man. I don't know if you saw that.
I did see it, and I saw the tweet about it, and then I retweeted it, and a friend of mine, he was standing there trying to take a picture of it. He's like, man, it's not running right now. He sat there for a few minutes waiting for it. But that's cool stuff, right?
Yeah. Well, I don't know. Next time, it's what happens next? Is it handprints on the Hollywood Walk of Fame, or is it going to be is the real pinnacle getting a shown on Big Ben or the Grand Canyon, I suppose, for you guys out in Phoenix?
Well, I'd just like to have a blimp over the Phoenix Open Golf Championship. That'd be pretty cool. But anyway,
right, we've got so much to talk about, haven't we? We've got so much to talk about. So let's get to it. Let's talk Topical Thunder. Okay, so I think it's difficult to start with a real top-down, big picture oversight. You know, we've got very constructive headlines coming around the Ukraine-Russia situation. There's negotiations taking place at the moment where apparently if the Ukraine were to talk about neutrality and accept some smaller military situation, then Russia may agree to a ceasefire, perhaps even a slight troop reversal, withdrawal, should we say. Markets have absolutely feasted on it. It's just showing the sensitivity to any good news around this situation. Great for humanity, obviously great for the markets in terms of risk in that situation. We've just had a Fed meeting. We can dissect that, to the cows come home. But risk is, in the last 24 hours has had a big move. European equities flying, Chinese markets. We saw the PBOC, the state council. Pretty much every organisation in China is vowed to support the stock market and the international ADRs as well. And we're seeing incredible moves. The H shares was up 12%. I mean, it's trading like a stock, but it's a basket of stocks. The Hang Seng was up 9% as well. These are incredible moves. Where are you sitting if you're looking at the big picture at the moment? I don't want to say bullish or bearish, because our job as traders is not to be bullish or bearish, but what are you seeing here?
Well, Chris, you bring up a couple of great points. And as far as like Russia, Ukraine, I think the market's really poised for the worst case scenario. The worst case scenario being this drags out for quite a long time. So this move higher today, especially post FOMC, maybe it's attributed to a little bit of reversal in that risk sentiment. Also, if you think about like the COVID situation and how many people have been poised for additional downside, additional risk off with some of these port cities in China, locking down. Yeah. And to be fair, I mean, the rest of the world has kind of moved on from COVID. And I know you could argue and say, well, the vaccines in China aren't quite what they are everywhere else, or perhaps, this zero COVID policy, it's, China is just trying to keep it at that. But in all actuality, I think the rest of the world is kind of over COVID. So, but a lot of people were, afraid that there might be, another effect from, some of these lockdowns that might affect China. So I think we're seeing a reversal in that sentiment. So
covering.
Yeah, a little short covering. I think people are positioned maybe for more risk off, and maybe the S&P to break below 4K. And I think the way the market really responded to today is maybe a result of a reversal of that. What do you think?
The geopolitical headlines, obviously great to see. Let's hope it actually becomes substantial and actually becomes to fruition, and we can see an agreement. Obviously, it could fall apart, and obviously we don't hope that doesn't happen. In which case, markets could see a big reversal. Euro goes down, DAX falls again, and oil prices spike. But obviously, this is a headline I think is really worth watching, and it seems to supersede everything we're seeing from the Federal Reserve. So I think this is great, and I think it just shows that the market probably wants to squeeze higher in the short term, and they're searching out good news for the first time, which is fantastic to see.
Well, and that's going to take us over to the FOMC, Chris, and we should talk about the Fed because obviously that was the big event today. But going back to just really quick about positioning and market sentiment, I think this squeeze is partly attributed to the Fed. I mean, the Fed raised rates. Yeah. Finally, we finally got off the zero. It's again, is it all priced in? And then the market's looking at the Fed being. They might raise rates another 6-7 times, in 2022. That's what the market's starting to price in. Yep. But yet the stock market rallied. What's up with that? I mean, and the
dollar fell.
And the dollar fell.
Yes.
But I'm wondering, you had this was a classic risk on move. You saw cryptocurrencies rallying. You saw the yen continuing to sell off. Yep. You saw the dollar actually selling off post FOMC. And I'm almost thinking, Chris, that it is have you ever seen it? I mean, well, you have, I'm sure. Over the years, when you see the yen basket move and break out, it takes the dollar down with it. Yep. You see like Euro yen, Aussie yen, Guppy, pound yen, New Zealand yen, CAD yen. They all start ripping and the dollar just gets bulldozed. So what do you think here following the Fed? What do you think about this price action?
I think, first of all, underpinning this, you had effectively China saying that they're going to support the Ukraine economically. This China first policy means that they've got to do what's best in China, and that really means aligning with the rest of the world. You've got the Chinese backing up the stock markets, and you're going to see kind of everything, it's the Mario Draghi moment of China, effectively, do whatever it takes. I think, risk assets are supporting that. You've got constructive headlines playing that. And look, the Fed meeting was undeniably hawkish. The dot plots were significantly higher than what the market was looking for. And we saw a sell-off in rates, and that's a reflection of the dots and everything we're seeing there. But if you ever look at the yield curve flattened out. That tells me that part of the market are quite concerned with what we've been seeing, that they are going to see a further tightening, aggressive tightening that potentially causes a recession. But the equity market was just underpinned by all these factors. And if you actually listen to what Jay Powell said, he's really fighting that credibility. He wants to get ahead of the curve. He's talking about having a very limited a chance of pushing the US into recession. His commentary was very upbeat, very positive indeed. And the market said, well, there's no hint of concern despite raising rates potentially 7 times from the committee. And I think we just feasted on that. So we had the tailwind to our back. Jay Powell gave us that hint that that the US is okay and they're going to be able to absorb these rate hikes, and said, you know what, let's pare back some of these dollar longs, let's put some risk on the table. And I think it severed the connection between a move up in rates, a move up in yields, and a dollar story there. So I think there's more legs to this. I think we're going to see equities continue to rally in the short term here.
Well, all right.
Well, there you go. Mate, we just talked about the dollar. Let's talk about the dollar a bit more, because I want to go into this a bit more. Because, we saw the Aussie dollar absolutely going for it. Aussie yen had a really strong move, but Aussie dollar had a good move. You saw Kiwi dollar, you saw the Swedish krona having a really nice move up. The NOKJPY, despite oil prices looking quite vulnerable, the NOKJPY's just worked as a kind of a pro-cyclical currency. And you've got euro dollar pushing back above 110. Now, can this last? You've got a Federal Reserve who are talking about potentially raising 50 basis points in the next meeting. There's a pretty good chance that we get 50 basis points in May. You've got yield differentials working back in favour of the dollar. You've got equity markets which are causing dollar weakness. But you've got these conflicting factors: equity weakness, equity strength, which is pushing down the dollar. But then you've got rate settings in the US which say be long dollars. How does this reconcile with you?
I actually think a lot of it's going to come into line depending on what happens with the Russia-Ukraine situation, right. and because that's going to free up the euro.
Positioning. So you're on the positioning bandwagon, right?
I am. I think that the dollar can really independently move against other currencies. Yeah. I love Aussie dollars. I love the Kiwi. I love I love selling dollars against a lot of different currencies.
Yeah.
Even the sterling. We'll see about the Bank of England tomorrow, but even the sterling to a certain extent. The euro, until it gets above 111, 111.20, 111.25, I'm a little nervous about being super long euros or short dollars as a whole, as a basket. But, I don't know, Chris. I think the dollar looks pretty weak against a lot of currencies minus the yen. The yen's always doing its own thing. And I think the dollar yen's going to be kind of it's in a massive breakout right now.
I think if we get further highs in equities, if we see, especially we've got options expiry coming up on Friday. There's something like $3.3 trillion worth of notional, which is due to expire on the various things that are going to be, or the different markets that are going to be expiring. The short gamma position could mean that on Monday the dealers are left with a fairly short futures position that they want to cover, and that could see equity markets moving even further higher next week. And you don't want to be short risk effectively. If we were to see some sort of really clear signs of de-escalation, I think the markets would just absolutely love that. And I think that would be bad for the dollar. One thing I've got to ask though, Blake, I mean, how much are you over this idea that Russia could be defaulting on its debts and what that means for the dollar and risk assets more broadly? They've missed a coupon yesterday, or they tried to make it in rubles. That could be a debt default, effectively the first time Russia have done that for a long time. Could that be an event that causes the dollar to rally and risk to come off?
I think you got to watch European banks, right? I think you got to watch all the exposure that's out there. That's like number one.
Yeah.
But there's probably, if you think about it, there could be several weeks before that happens. And I'll tell you what,
right.
The S&P's got some room to run to the 200-day moving average before it even starts to look a little toppy. So I think near term, as a trader, I think the dollar can still sell off. But should there be a funding crisis, a liquidity crisis, you got to be long the dollar at that point.
They've got a 30-day grace period now. So, shit gets real after that 30-day period. And I think the markets will tell you if they're concerned, won't they? The markets will tell you.
Earmuffs, kids. All right, that's going to take us over to, speaking of risk on, risk off, Chris, I want to talk a little bit about these commodity currencies.
Yeah, right.
The Aussie, the Kiwi, the Canadian, Norway. You can even throw the emerging market currencies into this mix if you want. But these commodity currencies have not acted the same way that they have for the last 20 years that I've been trading predominantly currencies.
They don't go down.
And it's been, what's that?
They're not going down.
They're not going down. And, we've seen a 20% correction in the NASDAQ, and we've seen corrections in other markets too. But you would have expected that the Kiwi and the Aussie and the Canadian would have been demolished by now.
Correct.
But they have held up really well. And I've had one of my colleagues, he says, it's, kind of, furthest away from the drama. But I actually believe there's a lot of commodity upside pressure globally that's just a tailwind for these currencies. So are they the new safe haven? I mean, do you really want to own commodity currencies in a risk-off environment, or are they just going to pop if we see risk pop? What do you think here? Where do you stand on these commodity currencies?
Well, I guess, mate, to be honest, it depends on your strategy. If you're a trend follower, you're already long. I mean, you already picked these up as, Aussie yen, Aussie dollars trending, Kiwi yen, they're all trending. So you're probably max long in those positions anyway, because they came onto your radar a long time ago. If you're scalping, then that's a whole different, if you're a mean reversion scalper, then that's a whole different factor, right? So it really depends. But what do I think fundamentally as a bias for these currencies right now? I like them. I wouldn't be betting against the Aussie. The idea of buying pullbacks. I had someone say to me the other day, you say buy pullbacks, Chris. How do you buy pullbacks? Well, I mean, obviously, when you get a bit of weakness, things don't go up in a linear fashion forever. You're going to get people taking profits. And when people sense profit takers, other people sort of jump on board. You don't want to be the last person out the door. And you just wait for price to stabilize. And it's about trading price action then. But right now, Aussie yen, Kiwi yen, NOK yen, they all just look fantastic. I wouldn't be betting against them. You're either long or wrong. I think you're either long or neutral, I think it's a struggle to be short as a tactical bias. Obviously, again, it comes down to your trading strategy. So I think they look really nice. Aussie yen just is in beast mode right now, right?
It is, and so I mean, it's like you either get off the bus or get out of the way. At the end of 2021, I was asked, your best trade of 2022. And I was like, I'm going to buy the Aussie dollar as it dips to 70 cents and be long because I think it's going a lot higher.
Sure.
And in my mind, I always thought, hey, I think the Aussie is going back to parity against the dollar. And hey, that's good for you if you want to ever come to the US.
Mrs. Morrow's going to make some meatloaf, and I'll be around there with
there you go.
Then you come on dollars.
But in my mind, I was trying to figure out how was that logically going to work. But if you watch price action in the last few months, it's now starting to make more sense, right? I mean, anyway.
Yeah, I mean, the market was so short of Aussie dollars, and they still are, to be honest. So I still like this higher, to be honest. I think these markets go higher. And I think they're going to be some of the ones we're going to be cover up in some of our plays. Actually, it was my play of the day last week. But yeah, let's go to some of the charts and see what we're seeing at the moment. Let's go to this, a setup. All right, well, I've got NOKJPY yen. Why have I got NOKJPY yen? We've been talking about it pretty much most of the show. But what I love about the NOKJPY is that, for large periods of time, it was so super correlated to what was going on with Brent prices. It makes sense, right? You've got terms of trade in Norway, obviously so heavily affected by what was going on in the Brent price. They're one of the major exporters. So you saw a strong correlation. And when Brent prices collapsed, crude prices collapsed, 25% from those highs. Yeah, we still saw the NOKJPY continue to move higher. So it completely decoupled from what would happen in that key terms of trade. And that said to me something. That was a clear message that the market wanted to go pro-cyclical, and the Norwegian crown was acting as a pro-cyclical currency. Now, if you apply it to the charts, I mean, I don't need any oscillators just to show this is going up. So from a pure momentum strategy, which I love to run, I love to buy what's strong. I love to sell what's weak. Go with the direction of the capital when you've got an aggregation of all these different players that are going real money, leveraged accounts, reserve managers. It's all a melting pot of flow. That's really what we're seeing. This is broken out. Now, can it last? With so many momentum strategies, you get so many false starts, you get stopped out for small losses. Yeah, this is one that I think can run. I think this goes up to 13.6. I think this is a really, really strong move, and it's closed near the highs of the day. That's a powerful statement. I think this has broken out of that trading range. I think it goes higher. What do you think?
I like it. And I've been really into these harmonic patterns recently. Yeah, right. It's just more that I can see them. I see them, and sometimes it's easier for me to see them. And right now I can see it in the Norway yen and the NOK yen. It looks great. I think it looks like it goes to 1348, 1360, somewhere in that neighborhood. Yep. That's like a 78 or an 88% retracement of the entire move. Yep. But it looks bullish and it's breaking out. I do have a reservation about the yen, but I'm still bringing a yen to the table, and I'll talk about that here in a few minutes. But
the
I
yen's
like
not
the
acting
breakout.
as a safe haven. It's not. It's just no. What does that? What is the yen for?
Who's buying yen right now?
Well,
right?
Even when the equity markets were collapsing, no one was buying yen. Why was anyone buying yen? Well, why would you buy yen?
So let's talk about that. I'm gonna take you over to the Aussie yen because it's a very similar picture to the Norwegian yen. But one of my colleagues who traded on a yen desk for, he lived in Japan for 5 years. He was in the FX market on dealing desks with major banks for almost 40 years. He's like, he lived in Japan, traded the yen. That was his currency. Yep. And he's like, look, Blake, the commodity pressure is putting a lot of pressure on the yen. Japan's got to bring all those commodities in, all the resources in. So it's going to weigh on the yen. So anyway, going to the Aussie yen, this is a breakout, and we're getting close to my target in the Aussie yen right now, just intraday. And actually we're testing it. It's 86.80. We're at the 161% extension, which is a butterfly pattern. But if it extends, it takes us all the way to 91, Chris, 90, 80, 91. Right. And that is a huge breakout. Yep. We were just talking about the Aussie yen. Yep. What do you think here? But wait, before you say something, I have to say, daily sentiment index for the yen has been in single digits for the last 3 days, which is very extreme. Yeah. So, I do want to be selling yen. I just don't know if I want to do it just yet. But anyway, what do you think?
Well, I just find, again, it's just like, why would you buy? I mean, apart from the fact that we both dislike it. It's probably, that in itself, Ben, you've got the sentiment, but you need a trigger to do it. And maybe it is just people taking profits on the shorts that just causes all the algos to sense that there's big profit taking, and it's sort of, you don't want to be the last person out the disco when the disco's on fire. You want to be closest to the door, right? And that's the reason. It's just a flow move. But fundamentally, I can't see this. But yeah, you've got a huge level of rising resistance, that trend resistance to come through. Maybe that's a level that you can look to scalp against as a quick one. But obviously, if that breaks through, like we saw with NOK yen, that's a very powerful statement at the moment. And I wouldn't be betting against this. If risk comes in and we look at the equity market, if the VIX pulls down to the low 20%, that brings more capital into the market. I think if the VIX goes down into the low 20%, that Aussie yen probably tests that resistance and breaks through that point there as well. And another one I want to bring up there is because we're talking about these geopolitical issues, is the vol that we're seeing, the volatility we're seeing in crude, spot crude especially. I really like this chart, but do I like this from the short side? We saw that move up to into sort of 130. We've seen a strong move down into 95, and price is sort of gravitating. Now we've broken through the rising trend support. That in itself doesn't necessarily mean we're going to see a further collapse, but we've obviously seen those series of higher lows coming out of the market. Positioning was definitely overstretched to the upside. We got to 130. We were trading something like about 7 standard deviations above the 50-day moving average. We've come back. I think personally there's risk that this comes down to 85, not from a risk perspective, but because if we were to see more positive headlines around Russia, Ukraine, real substance to that, I think that the oil price would fall on the back of that. We take out yesterday's low, and I think then you've got that former breakout level around sort of just around $86. I think that would be the target. That's what I'm looking for in the short term. What do you think?
Well, one of the things that you're not looking at just because of the chart itself is the intraday price action, which actually gave us a head and shoulder pattern. Right. The neckline broke right below 105. It's like 104-ish. Yeah. So the target for that, if that pattern fulfills itself, Chris, it takes us right below the 200-day moving average, right just below $80. So your 85 target, for me, whenever I see a chart pattern, I always try to get out before we actually reach the completion of the pattern, because everybody's looking at a pattern. So I try to get out before then. So if your target's 85, I think that's like in line with what I would be looking at the short side. Yeah. Do you short it here? I don't know. If it peaked its head back up towards 100, I'd probably be a seller up there.
Well, I think that low that we can see with the blue line drawn at the bottom of it, I can't remember the exact number. I think it's around sort of 95.36 or so. If it breaks through that's where you can use your execution. That's where you can use sell stop orders and take the momentum through and just pick up a move down into sort of 86. So it's not always about selling limits and using limit orders to move that and take swings. But yeah, I think using stop orders to sort of through those highs, through those lows, to try and take the momentum and hope that it continues on that movement through those lows would be quite a good idea on that one.
Well, speaking of momentum, Chris, let's turn our attention to these cryptocurrencies like the Ethereum. This has been a big channel support. We've talked about it a lot in Bitcoin, Ethereum, and with the risk off that we've seen over the last, let's just call it the last several weeks, notice that Ethereum and Bitcoin, which Bitcoin's not shown here, it's just Ethereum, but I'm playing Ethereum right now. They've been holding up, even though it's kind of like the yen and the commodity currencies. They haven't been moving down with equities. And so that divergence in correlations speaks volumes to Ethereum, meaning that we have this nice little triangle set up, Chris, and we start breaking above like 2,800. We should see probably 3,200 again, and the 200-day moving average is up near 3,500. And that's not a small move. That's like if we make it all the way up there, you're talking about a 10, 11% move. Yeah. And that's a big move in currency world. Yeah, maybe not in crypto world, but in currency world. So what do you think here?
I prefer Bitcoin. I prefer Ethereum. I prefer trading Ethereum to Bitcoin. It's a higher beta play. It's not quite as crazy as some of the altcoins or shitcoins, for example, but you get that little bit more of a bigger percentage. So it's slightly higher beta than Bitcoin, but does pretty much the same thing. So I prefer trading Ethereum over Bitcoin as a trade, long and short. But again, I mean, this is one that needs to break. I think this breaks the upside. If you put a Morrow gun to my head and say which way does this break, I think it breaks the upside. But But yeah, with all these kind of patterns, you wait for them to complete and trade the completion, or you can be really aggressive and go early. And if you're going to go early, go small in that situation. I think this breaks to the upside personally, and I think you probably move up to the 200, maybe 3,600 is your level. So I think that's the risk is it goes up to 3,600 and accelerates once this pattern completes. So yeah, I think this is an interesting one. But yeah, I mean, we're seeing consolidation. The bulls and the bears are trying to make there's a bit of a battle going on, isn't there? One of those parties needs to re-establish itself and be the dominant force. I personally think that it's going to be the bulls in this situation here, especially if risk comes on and equities continue to push higher. But I think it's a really good point now to come to the penultimate part of the show, and let's go to our play of the day. But it's really interesting. I mean, there's a million things we could look at in this market. Of course, when you get high vol, you're going to get opportunities all over the shop. Last week I did Aussie yen. This week I'm looking at Euro Swiss. I think we get up to 105, top Bollinger Band. We've broken the series of downtrend, lower highs. We've had a nice move up. It's probably a little bit overcooked. I wouldn't necessarily read too much into stochastic momentum. Obviously, it's just a reflection of the underlying trend. But, you know, it's holding all the short-term moving averages. It's trending higher. It's got a nice momentum in this play. If we were to see real meat on this negotiations that's taking place between Russia and Ukraine, I think you're trading 103.74 at the moment. I think you've got a nice move up into 105, perhaps even a little bit higher. The market's short euros. I think not in the not commercials, but I think if you're looking at the general flow we're seeing from real money and in investment banks, market's been expressing themselves through the sort of the lower equity markets, the lower risk off situation by being short euros as a hedge. And I think that if this really builds, then it goes into 105. Obviously, the risk is that deal falls apart and obviously the fighting continues for some time soon and people re-establish it. So it's a massive risk, of course. But I think, yeah, given what we're seeing at the moment, the market wants to squeeze higher. I think 105 is in the play there.
And I love it that the dollar Swiss is actually breaking out as well, Chris. Yeah, right. So that's just another thing that adds fuel to this fire. So I'm gonna turn your attention to the dollar rand, and this goes back to the conversation that we were having about those commodity currencies. And just FYI, I played the Aussie Canadian on the short side just the day after we aired last week, and that one actually made my week. So I love doing these plays of the day and these types of setups. And I'm looking at the dollar rand because we actually just closed below the 200-day moving average. So if we break below the 50% retracement, which you see there is around 1487, 1488, we start clearing some of those levels, some of that support. We have a bearish wedge. A bearish wedge is defined by lower highs, consistent lows. And considering the fact that we just closed below the 200-day moving average, we have those consistent lows across, from the November lows all the way across, and the lower highs. This should take us down towards 1450, which is near the 618 retracement. So I like the dollar rand on the short side. I think these emerging market currencies, like the commodity currencies, act really well in this current environment.
Yeah, good stuff. Well, that's all we've got time for. I will just quickly take a note because we always get people saying, why have you not talked about gold enough? Gold's a tough one at the moment because you've got potential for falling dollars. That's obviously good for the gold price, XAU USD. At the same time, you've got bond yields selling off and moving higher effectively in that situation, which is a gold negative, especially if real rates are moving up. So you've got conflicting force, and it makes life a bit more problematic to sort of forecast and trade gold. I will say though, if the yield curve continues to flatten, I think the gold will be a good hedge against a potential recession that the bond market's pricing in there. So that could be very positive indeed for the gold price. So that's something we are watching as well. But again, appreciate all your comments. Feel free to just leave a comment about anything that you've heard about the dollar, about what's happening in Chinese equity markets and the crazy moves we're seeing there, what's happening in commodity markets, what's happening around the Fed, and what you think about what's going on there. Leave your comments there, and if we can get time, we'll definitely respond where we can as well. And if you're watching the show and you're still watching the show now, smash the like button. We'd obviously really appreciate that one as well to try and grow the program going forward. Anyway, that's all we've got time for. That's it from Blake and I on the trade-off this week. See you next week.